Hello, I'm Brian Roten, senior reporter at Hotel News Now. I'm here with Ryan Ori, senior staff writer at CoStar News, and David Duncan, president and CEO of First Hospitality, a hotel development investment company and third-party operator. They're both based in Chicago, and that's pretty convenient since that's what we're talking about today. So before we begin, I want to thank both of you for taking the time to be here with me today, and special thanks to CoStar's Emmy Heiss for helping me out preparing for our discussion. So let's get started with a brief overview of the Chicago hotel market. Like many others in the top 25, Chicago hotels took a big hit during the pandemic. They were a little slower to recover as that strong leisure demand that we saw buoy the rest of the industry generally stayed away from urban locations. But now we're seeing leisure and group demand coming back, helping bring back the city's KPIs near pre-pandemic levels, but we're still waiting for business travel to make its return, just like most other markets. So I'm curious what both you guys are seeing firsthand as you're in and around the Chicago area. What are some signs that you're seeing about business demand coming back, tourism recovering in Chicago? David, I'll throw to you first. What do you see?
Thanks, Brian, and thank you for having me. And Ryan, pleased to make your acquaintance now that we realize we're both in Chicago. We'll have to break bread sometime soon, which is, what I've learned about Chicago is that is a great tradition. This is an eating town, and so we have some great restaurants. So we'll go find one of those. To answer, I think, the sort of big picture question, we're quite optimistic with the recovery of late in Chicago. The pandemic was tough in every major market. Chicago was not spared from that, but the one thing that's really buoyed our spirits, if you will, and our hotel occupancy has been, and you touched on it, leisure demand. Chicago is an interesting city in that it consistently voted one of the top leisure city destinations for leisure on Condé Nast a number of years in a row as an example. And so we really benefit from a strong tourism presence during the warmer months, and that has really sort of helped offset the lack of business travel demand, especially in the city center. Our office, some of our hotels are downtown, and it's a bit of the tale of two markets. Downtown Chicago, like other cities, has had more of a challenge coming back. The suburbs came back first, or didn't go down as badly, but street life is pretty busy these days. Sort of an ad hoc observation is our office is in a building that also houses Amazon AWS, and literally the last 2 weeks in a row, and Tuesday through Thursday, you couldn't find a parking spot. You couldn't get into the parking garage here. Amazon's called everyone back to the office, and there's literally a line out the street on the for cars coming into our building. That's not representative of most Chicago offices. As we're still at 50-some% sort of occupancy levels compared to pre-pandemic, but it seems to be coming, heading in the right direction with a lot of corporate travel and corporate office sort of policies, appreciating work from home is wonderful for a lot of different things, but if you're going to build culture, you need to see people, and we're seeing a lot of that sort of resurge.
Yeah, and Brian, I think a couple of things I notice are that I'm a train. I commute on the train. I just go a few stops from where I live to the office, and there's a lot of days of the week now where it's very crowded, hard to get onto the train or going in or coming back home. But there's other days, like a Friday, for example, where you can kind of breeze right in, and there's plenty of room. So it's not a consistent experience. You can tell that people are coming in to work middle of the week, especially. You also can see inconsistencies in terms of like the kind of more tourist-driven areas seem like they're getting very crowded again, like Michigan Avenue, places like the Fulton Market has kind of emerged as a popular area, and kind of in between there, you kind of have the traditional heart of the city and the kind of heart of the corporate area of the city where sometimes there are larger crowds and sometimes not so much. And so I think that's kind of a signal that it's come a long way back from the pandemic, but there's still some days are more lively than others. And the other thing I hear from a lot of people in the retail world is that you see the huge crowds of people on Michigan Avenue and huge crowds of people out doing things, but you don't necessarily see them with as many shopping bags in their hands as they once had. And so the crowds are out exploring and doing things, but maybe not necessarily spending, at least anecdotally, maybe not spending as much as they used to on certain types of things, like just going and buying a bunch of clothes or whatever. They're going to do more kind of experiences and just checking things out.
When you're out and you're seeing these crowds, I mean, how's the Chicago nightlife? Are you seeing that the city kind of slows down at the end of the business day, or are people still out and about going places into the evening and night as well?
Yeah, I mean, I'll start with that one. I think Chicago is fundamentally a young city, but I think the sort of nightlife has migrated from its traditional sort of locations and cores to places like the West Loop and Fulton Market. I happen to live in the West Loop, which is near Fulton Market, part of Fulton Market, and the restaurant life, if you will, the restaurant crowd is busy 6-7 days a week there. When I walk home, if I'm walking from our office in downtown, the the retail and bar life, restaurant and bar life in downtown, it gets lonely pretty quickly after, in the early hours. And so what we've seen in our hotel portfolio is there seems to be a slight, I don't know if this is statistical, but a slight shift to earlier hours, and people are sort of calling it a night more, earlier than they used to. And I think that's definitely the case for downtown, less so the case for the West Loop, where it's just a little more, active, younger crowd hanging out to, sometimes the wee hours.
And I think there's also several neighborhoods in Chicago outside the city center where there's still a lot going on at night. Several of the kind of north side neighborhoods in particular, where you see large crowds of people still out late at night. But again, they've maybe cleared out from the dead center of the city. There are many hotels in the central business district, and many of those are still busy, but you don't see as much, as David said, you don't see as much people just, out to dinner late in the Loop, or out for drinks late in the Loop. You see them often moving, a little westward to an area that used to be meat packers and kind of gritty, and now it's, lively at night. And then the neighborhoods where a lot of, younger people live as well, people are out in their neighborhoods, not necessarily going to the Loop.
So as you guys look at, I mean, we're getting to the end of 2023 here. Everyone's got an eye on 24. What are you seeing, either just Ryan, based on your reporting, or David looking at your in-person observations, or what you're seeing from your hotels in the area? How are things lining up for 24? I had reached out over to the folks at the Chicago tourism organization to get an idea of what the calendar looks like for next year, and the 2024 calendar is shaping up, they said, for a very strong year for meetings and events in Chicago. Looking at nearly 1.2 million room nights confirmed for major citywide events. They said that's the strongest year since the pandemic by a wide margin, outpacing 2019 levels and approaching an all-time high of 1.22 million room nights set in 2018. I know the DNC is going to be there next year, and as a highlight is another event, I believe it's the IMTS, there's a trade show that returns to Chicago just after the DNC, with more than 100,000 attendees anticipated. So sounds like next year you guys are going to see a lot of folks headed your way.
Yeah, so the numbers that we're understanding, and I'm not sure our crystal ball is as clear as CoStar and some of the pundits, but what we're sort of expecting in our city center hotels, to put a frame of reference around this, is we think RevPAR will be up probably somewhere between 5 and 8%, which is pretty strong growth over 23. 23 is, to put that into context, has recovered on a static dollar basis slightly above 2019. And so if you were just looking at the numbers, you'd say 23 is better than 2019. let's ignore inflation for a minute because that gets complicated. It's behind on an ADR basis due to inflation, but total RevPAR numbers are up, and then 6% growth year over year looks pretty good. So I hope that it holds up. And because we have a lot of costs to overcome, a lot of cost creep, speaking of inflation. But we understand similarly the convention business. Chicago is not unique, but somewhat unique in that we have such a large reliance on the Convention and Visitors Bureau with 1.3 million, 1.2 million travelers coming to Chicago, filling up these hotels. It's never been more evident that the opportunity there during the pandemic when the conventions were nil. There was just nobody here. I mean, occupancy levels were incredibly low. But in looking forward to the future, it looks like next year the convention, I think you mentioned, will be 1.2 million. It's right on top of comparing to 2018, which I think was then probably the best year ever. Chicago has a convention calendar. Odd years are worse than even years just because of the way the conventions book years in advance. And so 2024, an even year compares to 2018, looks like it's going to compete on a total basis with 2018 from what we understand. The challenge that we've observed, and we have hotels very near McCormick as an example that also benefit from what we call compression, is the convention, the in the week pickup and how many people actually attend has not necessarily been as reliable as it was historically. And so what we've seen is the big book of business is advertised and locked in. We may or may not get the number of travelers from that same group that we would have pre-pandemic, but lately it started to swing the other way. And so I think my sort of observation is the convention business, to a degree, I'm going to be careful in the way I say this, is replacing some of that in the office dynamic. How do you travel with your mates, if you will? Used to see them in the office every day, and now if you're working remotely, I think the convention business, the group travel has sort of restored the human connection element. And so we're actually seeing very strong group business on a go-forward basis, and the convention business, maybe at the expense of, or maybe I should say it differently, offsetting slightly the business traveler is lower. But I think there's a real, leisure element to it. People are enjoying traveling and seeing one another. That's showing up in the booking windows.
And I think for Chicago, the absence of all these conventions was just especially felt because McCormick Place is just such a gigantic convention center, and it's such a big part of the economy. And so when you go from, you just flip the switch off and just completely stop those conventions, it was extremely it was hard on everybody everywhere in every city. But Chicago is one of the cities that is a major player in those types of events, and to have that just go away was pretty disastrous for the industry there for a while.
Yeah, so, I would agree with you. I think that Choose Chicago, which is the sort of resource that runs this part of the business for Chicago, they've really done a nice job. Thank God they've done a nice job for the very points we already made, which is it's really required for Chicago to have a healthy lodging market, but they've really done a nice job in reattracting business to Chicago. So we think that's one of the bright spots in the future.
When you're looking at some of the hurdles that are left in terms of like a full recovery for Chicago, is it business travel, the return to the office factor? People aren't going to travel if people are working from home because they're not going to go to an empty office. What are your thoughts on that, Ryan? What are you hearing? What are you seeing in your reporting about the businesses that are in Chicago and their return to office?
Well, to David's point, I think the whether people are or aren't going to the office doesn't necessarily have a direct effect on the hotels. It has an effect on all the kind of vibrancy that comes from huge crowds of people downtown. When pre-pandemic, you'd see people coming into work during the daytime, going out somewhere to get lunch, maybe sticking around afterward to have dinner or drinks with friends, maybe go to a show or a sporting event. And there you have people the same, group of people in the downtown for, maybe, 12 hours straight, whatever, separate from any tourism or conventions or anything. That these are just people who live in the city or in the area. And so I think it contributes, the lack of people going to the office probably contributes more to just the buzz and the amount of foot traffic that you're going to see downtown than specifically, who's checking into which hotel. But everything's just all interconnected, the offices and tourism and everything that feeds dollars into the restaurants and the shops and everything. It's they all affect one another.
As we're looking at cost factors in Chicago, I mean, labor is a big thing for the hotel industry overall. But David, can you kind of give us an overview of what the labor environment is like, in the Chicago hotel market?
Yeah, I would say, labor is the number one challenge of the lodging business, and frankly, a lot of businesses throughout the country. It's not different in Chicago, I would say. I don't think it's worse nor particularly better on average than, other cities. We operate 70 hotels and, beyond Chicago. Other markets are more challenged in terms of labor. Chicago has its own challenges. This year, the union labor contracts for the most part were renegotiated. Thankfully, that went well. In terms of, you didn't hear strikes and threats of strikes like you saw in Los Angeles and some other cities. And so, Chicago's reasonably business minded. I wouldn't say that about the political environment per se, but people seem to understand what makes the engine run. And so we're seeing challenges. One of the things that as a employer, we actually moved our office to downtown Chicago from the suburbs last year, sort of on the tail end of the pandemic, for one very simple reason: recruiting talent is the number one challenge in our business, and having an office, a lively office environment that's easy to commute to, that's got a reason to come here. We really sort of over-indexed to create a buzz in the office to make sure that people wanted to come here, and we found it challenging to have that in a suburban office. It just wasn't that magnet. It's really worked well for us here. I mean, we've not having a problem recruiting talent, but at the line level, at the hotel level, it is a challenge that's in place today. And as I've encouraged my team to stop thinking about holding your breath and waiting for it to get over, it will not get over for many, many years as a result of, this is a 30-year trend that's been building between low birth rates, dysfunctional immigration system, aging baby boomers, et cetera, et cetera. It's just a math problem, and it'll be a problem for a really long time. So what we're doing here is just heavily leaning into how do you really be truly an employer of choice. As I said to our team, it's a tough labor market out there. We just have to do better than the neighbor. So if people want to come to work here, we'll be okay on a relative basis. But that's not to undermine the challenge. It's a big problem, and the labor costs, all costs, frankly, as a result of inflation, have escalated very materially from through the pandemic, and we're not seeing that abate.
Ryan, how are you seeing that translate to other segments in Chicago, retail, restaurant, just general business, issues with open positions, things like that?
Yeah, I think it's hard to hire people anywhere right now. It's a tight job market, and there's labor costs. There's also everything else is expensive right now. So you hear a lot of talk from like the restaurant world about how just all the ingredients are expensive. Paying your staff, all the other costs, just costs are high. I had a kind of restaurant industry expert I was talking to the other day was saying it's the hardest it's been to run a restaurant in several decades right now, just with all the challenges going on. And there was a really well-known restaurant on Michigan Avenue that was called the Signature Room, and it was 95th and 96th floor restaurant, some of the highest views of any restaurant in the city, and it closed down, and it seemed like it had to do with a rent dispute with the landlord, among other things. But it was sort of a jarring thing to see, because it had been it had been around for 30 years, and it was there have been restaurants closing and other businesses that have closed during these tough times. But you do hear a lot about it in the restaurant world in particular.
So let's pivot a little bit and talk more about the real estate aspect of the hotel market here. Ryan, you've been getting a good number of bylines recently, dealing with some hotel sales, some hotel development. Can you kind of give us an idea of what's been going on recently?
Yeah, I mean, the one thing that's kind of interesting in general is that there's been a big slowdown in real estate transactions around the country, but you still see people getting creative and trying to do still trying to think of deals they can do. And in one particular recent deal, there's a Chicago developer looking to buy a 40-story office building, convert part of it to a hotel. It's a Chicago landmark, well-known building with views of the river and kind of the whole downtown, and it would lend itself to a conversion. But those are complicated projects, and not everyone's trying to do those types of projects. But just you are seeing people get creative, and it will be interesting to see what will still come out of some of the properties that have been in financial distress, and could be of interest to investors who would like to scoop them up. One of the biggest hotels in Chicago has the Palmer House has been in financial distress since early in the pandemic. They had the misfortune of having their loan mature, I think, a month or two into the pandemic or something like that. And so not a good time to try to refinance a hotel. And so there's still a lot of pieces to fall into place in terms of what's going to happen with some of these longtime existing hotels and buildings that might be eyed for conversions to hotels, or from hotels to something else maybe.
David, with your company's investment work, what are your thoughts on the hotel transaction market going on in Chicago?
My sort of threshold is it better be amazing. It better be an amazing deal. U.S. hotel market transaction volumes down well over 50% year over year. And Chicago is not immune to that. I would say, I don't have the stat in front of me, but even more difficult. We're looking to acquire hotels around the country. Chicago is on the wrong side of the list of pick cities for people to want to go into. And I think the fundamental bid-ask spread that's out there is quite significant. Backing up a little bit, fundamentals of real estate with a higher cost of debt is, when you work your way through the math, the asset is generally worth less than it was before interest rates went up. And unless you believe interest rates are going to come back down, the asset's probably maybe worth less. And I think that the challenge that the hotel business has is, multifold. One is most loans matured or extended through COVID, and we're maybe now at maturity today. The financing market is less forgiving, higher interest rates, lower proceeds, that is loan amount, and a lot of developer owners have deferred capital expenditures fixing up the building, borrowed the money, used the money out of the kitty, if you will, to pay taxes or do other things. And so I think there's a fair amount of distress, or maybe I say stress, in the hotel universe. And I personally think that we'll find some real good buying opportunities on a go-forward basis. We've underwritten 340 deals in the last 10 months, to give you an idea.
Jeez,
wow. We bought one. That is not a very good batting average. And it may be a great batting average, because that means we didn't buy the other, 339. But the point really is the seller constituent. Most people are not willing to give up yet on the value of their hotel. and it just is causing things not to trade. And so something's got to give. Either the interest rates come down, the debt market comes back a little bit, or I think some owners, perhaps many owners, will really be forced to, reconcile and, sell an asset at a number that they didn't find particularly, desirable when when they're contemplating it. And so I think personally over the next, some period of time, I've given up trying to guess how many months or years, there'll be some really good buying opportunities. With the amount of capital, however, on the sidelines, I don't think that we're going to see massive distress. I don't think you're going to see, 50% off sort of values like we have in some prior downturns. But I think there'll be some very solid investment opportunities on a go-forward basis. But it isn't today. It's, in terms of volume, there's just not a lot happening. And then when you it's interesting because it's like the tale of two cities. The hotel operating environment forecast is pretty strong over the next 3, 4, 5 years, we think. The reality is nobody could build a hotel in the US, I'm exaggerating for purposes of a point, for the last 3 years, and you definitely can't start building another one today. So good operating environment, nobody can build more supply, ought to be a prime opportunity to go buy hotels today, yet it's still very difficult. And what is even more difficult is getting a new construction project financed. And so it's, we're in a bit of a freeze frame state on transaction volume in terms of, hitting real volume numbers.
What's the lending market looking like for acquiring an existing property?
Better than building new properties for sure, for sure. But there really has been a retrenchment of the lenders. I've been in this business a long time. Often used to be, first stop, is an insurance company or your traditional bank, and insurance companies are still hanging in there, but the banks have become very, more conservative with their own problems. Presumably also some of those problems are caused by the office loan portfolio they have. And, with the resolution or the liquidity problems that is, with Signature Bank and the SVB, a lot of banks have just become, even more conservative. And so as we know, there's been a whole establishment of this alternative lender market, often run by private equity firms, the alternative debt funds. And, they're out there. Fundamentally, the spread's more expensive and it's difficult to get things done. And so what I'm being told by lenders is they're preserving their capital for only the best deals and the best borrowers.
Well, we're coming up on time here, so I'm going to ask for both of your final thoughts just to share with us. What's your outlook then? You look to 24, you look beyond. What's your expectation for Chicago?
I'll go first. I love Chicago. It's a dynamic place to live. We enjoy it. Winter, not so much. Thank God they have airplanes to the south. But Chicago is a dynamic city, notwithstanding some of the national headline news. It's a very enjoyable place, and I think it will do well over the long haul. I think our operating environment, we're pretty bullish on a forward basis as to the NOI, net operating income environment and ability to run hotels. I think it'll really be an interesting time to have capital if you have staying power. We're really looking forward to the next few years on the capital side. We've formed some great capital relationships to, when the time is right. I don't think that's at this moment. There'll be some, I think, very, very good buying opportunities. So in the hotel business, on a relative basis, I think it's very popular. Office troubling, multifamilies even have its challenges. Retail's got its challenges. Capital has to flow to real estate. Hotel is increasingly popular. And the NOI environment, the operating environment is pretty strong. And so I'm glad with our niche that we're operating in today, which is a fully integrated operating company that can buy hotels. I'm happy with our lot at the moment. And thanks for the time on today's podcast.
Yeah, I think there will be in 2024. I think there will be good deals to be made, money to be made by anyone who's whether it's hotels or other properties. There's going to be buying opportunities for anyone who has the guts to do it and can get somebody to provide them a loan and can find just the right opportunity. I don't feel like the floodgates are going to open, and 2024 is going to be a huge uptick in deals. But I do think there, as David said, there's money that's been on the sidelines. There's people looking for investments, and I think some of those will happen. And you'll start to see a lot of that in 2024, but I think it'll play out over the course of probably the next few years as to how that money gets invested. And also, as was mentioned, because so much money is sitting around, when there does start to be an uptick in deals, it probably won't lead to the kind of huge discounts that some people are thinking maybe they could find for themselves.
Well, thank you both once again for joining us here today. It was a great discussion, and thank all of you for listening. Stick with Hotel News Now for further coverage of the hotel industry.
Hi, I'm Isaac Colazo, Vice President of Analytics at STR.
Hi, and I'm Jan Freitag, National Director for Hospitality Analytics for the CoStar Group. Tune in to our new show, Tell Me More, a hospitality data podcast.
It's a podcast on the global hotel industry, its current trends, what we're thinking about, and where the industry's going.
And we like to have fun with the data too. Find us on hotelnewsnow.com or wherever you listen to podcasts. Subscribe today.
Thank you for listening to the Hotel News Now podcast. This episode was recorded on November 15th, 2023, and edited by Brian Roten. Go to hotelnewsnow.com for industry news every day.